Welcome back. We are reading between the lines as far as this budget is concerned and trying to get you views on how corporate India has reacted to this budget and what are the key takeaways that they have come away with. Joining me now from New Delhi is Rajya Sabha member Rajeev Chandrasekhar. Rajeev, you must have had a very, very busy day, but what is the single thought that has come out of this budget as far as you are concerned? What is the thought process that's come out from the finance minister?
I think going into the budget, at least to me, I was pretty clear that the finance minister had very limited room and a limited set of tools to play around with. He had to handle the fiscal situation, he had to boost public spending, and he had to address the whole boosting of investments. And given the limited headroom and flexibility he had, he's done what I believe is a reasonable job in terms of this budget.
That's a very muted reaction, Rajeev, considering that the Dalal Street was pretty gung-ho about the budget. Of course, they cooled off after some time. What's making you so circumspect?
No, I'm not muted. I mean, I'm not jumping up and down. Dalal Street is notorious in terms of overreacting and underreacting. So I'm not Dalal Street. But I'll tell you where I'm coming from. I think we have to be careful in understanding that this is going to be a very critical year, because while we have growth and we are anticipating growth, there are clearly headwinds against this economy. There is a whole global situation that is, at best even more uncertain than 6 months ago. There is this fiscal situation today. While the numbers look very interesting in that he says he will fiscally consolidate to 5.5%, there are risks to that happening. So I believe that this is, given the constraints he had, he did a reasonably good job. The impact of this budget in terms on a long-term, medium-term sustainable growth, I have my doubts. It's a difficult year. It is going to be a difficult year. I suspect people shouldn't be popping bottles of champagne just yet. We should wait for a few more months to see how this plays out before we start celebrating. Okay, don't pop the champagne, but let me ask you a direct question. On the money-raising side, did you see enough from the government? No, that's exactly the point, Minnie, I'm making. That look, there are a number of assumptions that are, for example, disinvestment 25,000 crores, net tax earnings of 25,000 crores, 3G auctions of 30,000 crores. These are all very rich assumptions, and it's based on these rich assumptions that you end up with a fiscal deficit number of 5.5. So therefore, we have to be careful, given that there are some headwinds that are around us, that these numbers have to play out and be real before we can start saying that we have clearly crossed this transition year. This is, in my opinion, one of the riskiest years for our economy to traverse, given the various variables that are in play.
Right. Rajeev, why are you talking of risks at a time when pretty much everyone we are speaking to is talking about the robustness of the Indian story? What's making you so wary about what's happening internationally?
No, I tell you, Minnie, there is a fundamental point that either people don't want to understand or are deliberately ignoring. Our recovery in the last 1.5 years has been on the back of a loose monetary policy and significant liquidity and credit in the system. All the cues that the central bank and the government are pointing to a tightening of this. Now, inevitably, in the face of such tightening credit and monetary policy domestically, the slack has to be taken by international flows. So unless we have a strategy which says, look, there is going to be significant inflow of investments. We are at 20 billion last year, and this year we are going to be at $35 billion of FDI, or some such significant increase in investment. It becomes very difficult for that monetary tightening space to be occupied by any other form of capital. So which is the point. Given the global situation today, where uncertainty from Europe is emerging and so on and so forth, it is not a slam dunk that we will see significant increase in investments. And there is nothing in this budget, by the way, that incentivize investment. There are no announcements of FDI increases in insurance or FDI increases in retail that says that, look, the FDI will go from $20 billion to $35 billion. Fundamentally, our economy grows on the back of significant capital flows. And in the back of a tightening monetary policy, the flows have to come from elsewhere, and that's not clear where it is going to come from.
Okay. In the backdrop of what you said, Rajeev, let's revisit those bullish projections for growth, be it for the coming year or the years coming by. Are you buying the numbers being projected, even if you take into account the implementation of GST and the kind of kicker it will be for the economy?
No, I really mean it. I am a big believer, and I said this to you before, that over the medium term, we can clearly, very easily breach the 10% growth target. But for that, there are some things that the government needs to do in terms of reforms on administrative reforms, making it easier for investors to invest, sectoral cap relaxation, creating more competition in every sector. So there are a number of things that are off budget, which are to do with the whole governance reform or structural architectural changes or whatever you want to call it, that the government has to do. Now, even now, if the government says, post this budget, that we are going to do A, B, C, D, E, F, G, which includes sectoral cap relaxation on insurance, retail, and so many other things, that go towards creating significant capital flows into the country, we could still do this. Then I'd buy the bottle of champagne. So I think the issue is really that just simply by reading of the budget, there are a number of questions that still remain unanswered in terms of what will happen to the economy in terms of flows and so on. And that, if the government clarifies it over the next, let's say, a week, 10 days, 15 days, whatever, I would join the party.
Right. Let me end by asking you a question that I'd asked you earlier. And you had said that, for you, reforms will be true only if they become broader, deeper, and wider, Rajeev. So in this budget, my question to you is that, do you see any of that?
No, it doesn't. And that, in a nutshell, if you ask me why I'm disappointed in that it doesn't say more about those very, very important issues. There has been a lot of rhetoric on this pre-budget a couple of years ago about the need for the government to be downsized, more flexible, more nimble, to make investments much more free. There's been a lot of discussion. I wish the budget had talked about given some directional cues on what the government is going to do in terms of reforms and governance reforms and this new architecture, economic architecture.